Well, now that winter's here, Sarasota traffic is definitely accelerating, but how about the home prices? Well, it actually depends on what type of home you're looking at. So let's take a look here. Hi, I'm Nick with the Iannitti Group. Want to come at you with a real quick Sarasota housing market update for the month of November. So looking at home prices, we know these are basically quarterly reports here. Case-Shiller and FHFA are both seasonally adjusted. These CoreLogic numbers are not seasonally adjusted. That's why a little bit lower. But we definitely know that prices have definitely rebounded, right? When we look at basically the top 20 cities, we know that Tampa's on the board there at 0.6%. Sarasota maybe not large enough to make that, top 20 cities here. But definitely things, when we look at that, things are absolutely moving in the right direction as far as home prices are re-accelerating. Now, when we break it down by region, we notice that the South Atlantic is probably the only region that has not basically crossed over. And I think this probably has a little bit to do with seasonality. Now that the wintertime is here, now that winter visitors are coming back, we've already seen more inventory coming onto the market. And I think when we look at the end of this quarter, this tail is, we're going to see a different story here. But according to Black Knight, for the second month in a row, home price growth trending higher in every one of the 50 largest U.S. markets, mirroring the sharp re-acceleration at the national level. Okay, so when we're looking at future home prices, right, this 49-year average of monthly home price movement, this is basically just seasonality kind of mapped out for you here. When we overlay our 2023 numbers, we know the beginning of the year got off to a rocky start with that correction we had due to mortgage rates doubling last year. But then, through the springtime, basically, obviously, we saw things kind of accelerate back up where they normally had been. And then when we look at the end of Q4 here, we're right back down to this 49-year average, which is really where we want to be from a sustainability standpoint, right? When we're looking at 10, 12, 15% year-over-year appreciation, it's just not sustainable. Okay, so affordability, though, we know that is still crushing folks out there, right? When we look at January 2021, the average mortgage is about $1,000 a month. Now it's $2,200 a month. Okay, this obviously affects buyers out there, first-time buyers especially, right? But it's also really affecting a lot of sellers. If you're sitting in a home with a $1,000 mortgage and you want to downsize and buy a less expensive home, and your mortgage expenditure is actually going to increase, really doesn't make a whole lot of sense. That's why we're seeing a lot of people kind of sitting on their hands, and why volume has been down, since these rates shot up by almost a third. Okay, when we look at rates here compared back to 2016, it looks a little something like this. But when we want some true historical perspective, we need to look over the past 5 decades. November 5th, the rate was at 7.38. That was kind of the spike here this month. But when we look at that compared to the 70s, 80s, and 90s, we're still kind of historically low. The problem is right now, half of all buyers are first-time buyers, and they just have no real historical reference. Obviously, a lot of them weren't even around in the 70s or whatever to have any type of frame of reference. Okay, but this is the other flip side of the coin. We have not seen buyer demand really dropping off. In fact, it's actually coming back pretty strong. Okay, so, and this is part of the reason why we're starting to see that home price re-accelerate. Okay, so I thought I'd bring this up here just real quick. Multi-generational living, right? We're seeing more of this because right now, National Association of Realtors said that multi-generational buying rose to an all-time high last year. Okay, we're seeing builders now with more multi-generational floor plans and ADUs in there. But this is really why I bring it up, because this is huge. Okay, in a significant policy change, Fannie Mae has announced that for the first time, it will accept as little as 5% down payments for owner-occupied 2, 3, and 4 unit homes. That is huge, right? This marks the departure from the previous multifamily financing requirements, typically around 20, sometimes as high as 30%. We're definitely going to see that changing up some things here next year. By the way, if that is something you're interested in, you definitely want to get with a lender and look at everybody's combined finances, and they can help you out. But hopping into the housing update here for Sarasota, this is for single family residents, right? Single family homes. Month of October, these are median numbers, and this is for the entire county-wide. Remember, the percentages over here are year-over-year percentages. Everything above the line are our lagging indicators telling us where the market's been. Everything below the line are our leading indicators telling us where the market is going. So median sales price still down by about 3%, has not caught up yet. I think that's going to change over the next 2 months. Active market time still growing, taking a little bit longer to sell. right? But again, remember our month's worth of inventory. We need 6 months of inventory for a healthy, balanced market. Anything below 4 months of inventory is definitely a seller's market where we're at. However, the good news in this, right, is right here, right? For the first time, we're starting to see new listings. We're starting to see inventory gaining again. We're starting to see sellers coming back to the market. That's great news. I definitely think this has to do with our seasonality here in Sarasota. As winter winter is starting to come down, people are starting to come out. We're seeing activity at every store you go to, gas station, you name it. Obviously, the hustle and bustle out on the road, and we're seeing that spilling over into the housing market. Okay, now this was some good news, right? This is townhomes and condos, basically collectively, again, countywide median numbers. Median sales price was up 10% year over year. That's great, right? Active market time still taking a little bit longer to sell. Month's worth of inventory right around that 4 months. So that's not great. But again, back to here, back to our leading indicators, right? These new listings are coming on 67% up year over year. That is absolutely a huge injection in what the market needs. We haven't seen the sold listings caught up yet, but I bet by next month we'll actually see that change. So definitely good news. We're going to see things basically starting in the right direction. So anyway, that's about it. If you guys have questions about, what's happening in my neighborhood, what's my home worth, how much equity am I actually sitting on, is this a good time to buy or sell? Just reach out. I'm more than happy to answer any questions that you have. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.